Hello, everyone, and welcome to yet another market outlook presented by SwissBorg. My name is Pietro, SwissBorg Analyst and Senior Investment Analyst at SwissBorg Ventures. And this week, we'll be taking a look at historical drawdowns in the stock market. We'll then take a look at correlations between Bitcoin, so the crypto market, and the stock market. And finally, we'll be taking a look at a very interesting trend in the crypto industry as of late and as of really the start of 2022, which is the move to earn movement, so the move to earn market, and one of the coins pertaining to this move to earn trend, which is Sweatcoin, which was also recently listed on the SwissBorg app. To start off this week, we'll be taking a look at the stock market and specifically historical drawdowns in stock markets. So when we talk about drawdowns, we're talking about persistently downward trending periods where the stock market loses a certain percent in their current stock price. So indices will progressively be moving downwards in terms of price. And overall, this is coupled with an uncertainty in the market, a bear market period, or potentially even a recession. So looking at since the start of 22, actually, so looking at the entire year of 2022, we can see that the year-to-date performance of indexes has been pretty poor. Of course, this is coupled with continuous influx of negative news related to the Russian war, related to inflation, gas prices, and recession fears overall. And in all of that, in terms of year-to-date performance, the S&P, the Dow Jones, and the Nasdaq have both lost anywhere between 10 to 25%, which is pretty significant in a year's performance, especially considering that a potential future recession might not even be priced in. So how does this year-to-date index performance compare to historical drawdowns in the stock market? So that is what that second graph there is showing. It's showing the largest US equity drawdowns, so the largest periods of losses in the stock market and of percentage losses. So it is tracking both the percentage losses of certain periods, whether that be, for example, the global recession or the Great Depression of the late 20s. And it's showing both the percentage loss as well as also how many trading days these losses were experienced. We can see now that where we are at the moment, so the red line, the percentage losses have already been severe, but in terms of trading days, it has been pretty minimal. The same can be said for example, 2020, when COVID first started and stock markets lost a lot of their percentage in terms of pricing. But this is pretty incomparable when looking at some of the longer recessions or some of the longer drawdown periods. Now, this is to say two things, both that although we are right now in a bear market and although stock markets have been experiencing a severe downward trend, it could get progressively a lot worse when looking at the history before finding a bottom. But at the same time, we can also see that in terms of percentage losses, it's already been so severe that if a recession is not coming up, so if, for example, the predictions of recessions are wrong and we don't see a recession in 2023, we could actually be seeing a stabilization period at the moment because the percentage losses have already been so severe in the year of 2022. As the stock market has been doing very poorly since the start of 2022, and as the stock market is also looking for a bottom, and of course in a period of uncertainty because it's looking for a bottom, and at the same time experts are pointing to the fact that it's possible or even likely that we'll be going into a severe recession by the end of 2022 or towards the start of 2023. So this is all related to the stock market, and therefore how does this information relate also to the crypto market? So interestingly, this week we'll be taking a look at the correlations, so the correlation between stock and crypto markets and how that has changed over time. So the first chart is showing the correlation between Bitcoin, so BTC, and three traditional indices, which are the S&P 500, the Nasdaq 100, and the Dow Jones. So all of these are pretty in line with how they correlate between each other. So the S&P, how it correlates with the Nasdaq, and between those three indices. But when we look at Bitcoin since 2017, we can see that the correlation has drastically changed throughout the months of every year. So that correlation sometimes would even be negative, meaning that when crypto actually rose, when the crypto market started, let's say, to gain in price and traction, the stock market would actually decline. This is something that has not been experienced in the last couple of years, as the correlations moved a bit more similarly. But in the past, we have seen that stocks might be able to go up in the same period that the crypto market would go down. In this last couple of years, and especially in the last year, we have seen the correlation progressively get closer to a one-to-one correlation. One-to-one meaning that as the crypto market moves up by X% or X amount, the stock market will move up the same. And the closer we get to this one-to-one correlation, the closer we get to both asset classes moving in exactly the same way. Now, in the last couple of months, we have slowly and progressively gotten closer to that one-to-one correlation again, although, of course, the correlation is continuously fluctuating. So it's never really stable at a, for example, 0.8 level. And as the chart also shows, it's really fluctuating anywhere between the 0.2 to 0.8 level, which means very different movements and correlations between the stock and crypto markets. So also looking at the second chart, we can see that when we're looking from a one-year perspective, at the moment, both gold, the Nasdaq, and the S&P 500 are at the strongest correlation with the crypto industry, meaning that at the moment, and in these bear market conditions and uncertain recession-prone macroeconomic situation, it's clear that crypto assets are moving more and more similarly to stock markets because, of course, in these macro-intensive situations, it is the macro news, so the macroeconomic news, social-political news, that will move both of the asset classes. It'll be interesting to see in these last months of 2022 and the start of 2023 if these correlations move or if maybe crypto detaches itself a bit from the stock market. But this will all be very, very determined by macroeconomic news and by the state of the global economy overall. The final topic we'll be looking at this week is based on a very interesting trend that has been prominent in the crypto industry in 2022 and still is very much at the moment, which is the move to earn trend. So this move to earn boom happened at the start of 2022, and it's pointing to users getting remunerated for their physical activity. So the same way that Brave, the browser Brave, would allow you to get remunerated, so to get tokens by using their browser and by ensuring the privacy and security of that system, the move to earn projects will remunerate you because your physical activity, those data points, have value and therefore have some kind of monetary value attached to them. And therefore, thanks to blockchain and the innovations in Web3, projects are finally allowing you to get remunerated, so to get compensated financially based on this movement. There are a lot of projects, applications, and new ideas in the crypto space related to the move to earn boom. And some of the biggest players at the moment you will likely have heard of. One of the biggest ones is Steppen, the token being GMT. That again allows you to get compensated based on how much activity, how many steps you perform on a daily basis. And you do need access by buying an NFT, which is an NFT in a form of a shoe, that then allows you to get money based on how good that NFT is. Another one can be Genopets. Genopets is a very interesting project. It's very, very closely related to Pokemon Go and that style of, let's say, outdoor activity, but you also get remunerated for those kind of activities. And at the same time, it's very much fantasy focused in the sense of monsters similar to Pokemon. But in all of this move to earn boom, and with all of these projects doing extremely well in terms of our ROI in the public sale and in terms of traction and attractiveness of their projects. None of them is really comparable to Sweatcoin and Sweat Economy. So Sweat Economy recently launched their token, but before launching their token, they already had a Web2 application with millions of users, really numbers that are not comparable to the rest of the move to earn industry. These numbers are still sky high as they release their token Sweat, and as this token has already been listed on SwissBorg as soon as it's released, because SwissBorg really saw the potential that Sweatcoin has and how many new users it can attract to the world of Web3 remuneration and blockchain overall. So since the development of Sweatcoin in the Web3 space, we can actually track its rise in terms of numbers, not only in the millions of users, but also in the new Sweat wallet, which is the wallet that then allows you to have your Sweat coins and to potentially use them in the future. This Sweat wallet is now the #1 finance app in over 51 countries and the top 5 finance app in over 115 countries. Now, why is this very interesting? It's because this is not just a fitness app, a health app, or any of those other categories. It is now in the top 5 or top 1 in all these countries in terms of financial apps, meaning that this is becoming an extremely interesting, valuable entry point to a lot of people that might otherwise not have access to crypto assets, not have access potentially so easily to certain banks in their countries. And this is the perfect gateway to starting to earn your wealth, starting to own your wealth, and potentially entering the crypto market as a new investor and a new user. This is really a fascinating development. Sweatcoin is really here to stay, and the Sweat Economy, as well as the move to earn boom, are really focused on longevity, sustainability, and the future of crypto. And it's very exciting, both as SwissBorg Ventures to be a part of the early stage rounds, but also to have it so early listed on SwissBorg, because we really see the future potential of this project. Thank you very much for listening again this week. I hope everything's been informative, and I'll catch you again next week. Thanks again. Take care.